Weekly Candle Review. Week ending June 22nd, 2026. This week's candle score is 38, cautious. Bitcoin spent the week consolidating between $62,800 and $66,000. It closed near $64,000, down about 2% on the week, the fourth consecutive declining weekly close. The headline score reflects a market caught between two competing forces: genuine structural weakness on one side and quiet accumulation signals on the other. Let's break it down. Price action was unconvincing. Bitcoin tested the $63,000 support level repeatedly and held, which matters. But it never built on that base. For declining weekly closes in a row tells you the sellers are still in control, even if buyers are showing up at the lows. On-chain signals were the strongest positive of the week. Whales withdrew more than 11,000 Bitcoin from exchanges, a behavior pattern typically associated with reduced intent to sell. Long-term holders continued accumulating quietly at these levels. That's constructive. The derivatives market was cleaned up significantly. Friday's $330 million liquidation of overleveraged long positions flushed out speculative excess. Open interest fell. Funding rates turned slightly negative. A cleaned-up derivatives market is not bullish on its own, but it removes one significant downside risk. Now for the biggest headwind: ETF flows. Spot Bitcoin ETFs recorded a sixth consecutive week of net outflows. Approximately $227 million redeemed this week alone. Over the past 30 days, net outflows have reached $6.35 billion. That is sustained institutional disengagement, and it will continue to cap any recovery until it reverses. On the macro front, two things happened. First, the Federal Reserve held interest rates at 3.5 to 3.75% at its June meeting, the fourth consecutive pause, under new Chair Kevin Warsh, whose tone was measured rather than hawkish. Second, the United States and Iran agreed to a peace framework during talks in Switzerland, sending oil below $80 a barrel for the first time in months. Together, these removed a significant layer of geopolitical and monetary risk premium. Bitcoin dominance held near 58 to 59%. No alteración. Meme coins led weekly losses, confirming that risk appetite at the speculative end of the market remains low. The Fear and Greed Index moved from 22 at the start of the week to approximately 47 by Sunday, a meaningful recovery from last week's extreme fear reading of 8, but not yet a confident neutral signal. Looking ahead to next week, the watch variable is clear: ETF flows. At 227 million, this week's outflow was the smallest of the 6-week streak. Exhaustion may be approaching. If next week shows a pause or reversal in outflows, and the derivatives market stays clean, Bitcoin has the structure to attempt a recovery towards $66,500. If outflows accelerate again, the $59,000 support zone comes back into focus. Projected candle score for next week: 42, neutral. Key levels: 62,800 support, 66,500 resistance. We'll talk again next Monday. Take care.